Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Ashrin binti Asmawi and my group mate is Nur Alia Munira binti Ma'aruf. And today would like to present and discuss the case study on the topic be fearful by when others are greedy and be greedy when others are fearful. So basically, the case study background is about during the pandemic COVID-19, there are caused global economic disruption and lead to the market volatility. And some investor who panic change the investment to the commodity like gold. And some of the trade investor who are contrarian investor using the Warren Buffett principle take the opportunity of the condition and situation during the COVID-19. Insight from Kenanga Market Strategy Research indicate the pandemic economy just temporary situation, which is supported by declining new case trend in early 2020. And investor like Samnesh strategically capitalize on undervalued growth stocks, which is he benefit the condition from the rising demand for PPE during the crisis. So, the objective of the case study, there are three. Firstly, we will look what the implement trading strategy using technical indicator. And the second, we want to identify exit and entry point using support and resistance. And the third, we will see the relation of fundamental analysis using AIC and the technical analysis. So for the method, they consist two methods, which is fundamental analysis using EIC analysis, economic, industry, and company, and the second is technical analysis, which is using indicator and support resistance.
Next is analysis of the case study. We start with the fundamental analysis, which is economic, industry, and company analysis. The three-phase fundamental analysis is also called as an EIC analysis framework or a top-down approach. Here, the financial analysts first make forecasts for the economy, then for the industry, and finally for the companies. The global outbreak of COVID-19 severely disrupted economic conditions worldwide, including Malaysia. The country's GDP growth was impacted as evident by weaker than expected Q4 2019 GDP, which dragged full year growth to 4.3%. Contributing factors include declining public investment and export. Due to strict lockdown, travel restriction, and supply chain interruption, it affected several key sectors including entertainment, retail, and tourism. Sectors like tourism, aviation, and retail were particularly hard hit, experiencing sharp revenue declining and widespread layoffs. As the widespread lockdown, job losses, and economic uncertainty, it forced consumers to reassess their spending priorities. As a result, consumer demand shift away from discretionary goods and services toward essential items. Next is industry analysis. Due to the COVID-19, the heightened awareness of hygiene and infection control became a global phenomenon. COVID-19 amplified the demand for preventive and protective measures such as medical gloves, face shield, and sanitizer. The global glove market, for instance, witnessed a rapid surge in order as countries sought to secure supplies for their frontline workers and citizens. According to the World Health Organization, global spending on health rose again in 2021 to 9.8 trillion or 10.3% of global gross domestic product GDP. Government and private entities worldwide ramped up spending on healthcare to address the pandemic's immediate and long-term impact. This surge include investment in medical infrastructure, vaccines research, and procurement of personal protective equipment, which is PPE. Malaysia solidified its status as the world's largest exporter of medical gloves, commanding over 60% of the global market share during the pandemic. Hence, this industry analysis show that investing in the healthcare industry, such as a glove counter or any company that produce the procurement of personal protective equipment, is a great opportunity as this industry contrasts with others such as tourism, aviation, and retail. Next is company analysis. The case study highlight the financial performance of glove manufacturer. For instance, Top Glove, Hartelega, and Supermax reported steady revenue growth and profit, reflecting a strong operational efficiency and market leadership. Considering the investment decision issue raised in June 2020, Q2 2020 is used as the benchmark instead of Q3 for the analysis. As we can see for the top left, the sequential revenue increase of 40 million from the end of the year 2019 to June 2020 reflects a 3.4% growth rate, underscoring the industry's resilience during the pandemic. Following the revenue, the profit of Top Glove also showed the same trend, which is rising from 80 million in Q4 2019 to 150 million in Q2 2020, 45% of growth. The net tangible asset and earning per share also increasing illustrate the same trend. Next, we have Hartalega that also experiencing growth despite the downfall of other industry. This can be proven by the revenue growth, which is rose by 25 million or indicate 4% growth rate from Q4 2019 to Q2 2020. Same goes to profit that increased by 13 million and show 40% growth rate. As for the net tangible asset and earning per share also demonstrate a growth. Even though the dividend per share show a slight drop, it's still in a good range and still demonstrates strong performance in Hartalega's overall growth. The last one is Supermax. Supermax revenue also rose by 9.5 million, reflecting a 2.5% growth rate from the end of the year 2019 to June 2020. The profit indicate a significant growth by 100%, equivalent to 15 million. For investor, entering the market or maintaining their position during the period presents significant advantages, as this company are well positioned to deliver substantial return in the short term to medium term.
Okay, next we move to the second method, which is technical analysis, trading strategy using technical indicator. So as mentioned in the case study by Dr. Adli, there are three methods of strategy trading, which is firstly buy on breakout, where we purchase a stock when its price breaks, and the second buy on dip, where when investor buying a stock during temporary price decline, and buy on support, where the investor enter a trade near a support level where the price is expected to stabilize or rebound. So there are four tools of technical indicator used in the chart and how to read the chart. So firstly, if moving average (MA), which is act as stock price indicator and trend direction. And the second is MACD, moving average convergence divergence, which is to detect price trend, measure trend momentum, and identify entry for buying or selling stock. And third is signal line, which is trigger line for buy or sell signal. And the last is stochastic oscillator, which is useful indicator for overbought or oversold condition. So as we can see here, there are two types of chart, which is firstly in the left is healthcare and the right is FBM LCI. So the FBM LCI shows the act as the market performance, which is recorded a downtrend in March 2020, followed by a recovery from April to June 2020 before the chart fluctuate again due to COVID-19 and crisis lockdown. We can see it impact on the business performance where fluctuate were driven by low demand for the product and services in the market, will reflect the broader economic challenges during the pandemic. While the healthcare trend sector shows the strong upward trend from the end of March 2020 to June 2020, driven by increased demand for healthcare product, especially glove sector during the pandemic. So as we can see there, how we use the MA for the healthcare, blue line 50-day is above 100-day MA, which is the green line, indicate a bullish trend, a strong upward movement in the healthcare sector. While the MACD, the middle chart and graph, the MACD blue line is above the signal line, which is the red one, showing bullish momentum and increasing green bar on the histogram there, which indicates strong buying pressure, while the signal line, which is the red line, acts as a key support level when the MACD line is above the MACD, signaling continued positive momentum. while the stochastic oscillator, the price is in the overbought zone, which is 80%, suggesting a potential short-term fall, with trader advised to wait it to dip below 20%, which is oversold, before buying the stock. So next, we will look because the healthcare sector is showing the upward trend, so the glove sector is having the potential for the investor to invest. So firstly, we have Top Glove, Hartalega, and Supermax. So the technical indicator provide insight into performance of individual equity like Shamnesh to buy Top Glove, Hartalega, and Supermax, which is focusing on stock momentum, support level, and breakout possibility. And then the indicator also will help traders or investors to assess whether to hold or sell stock by evaluate the stock behavior and potential within the growing healthcare sector. So here we can see the chart of Top Glove. Top Glove's chart shows a strong bullish trend supported by high trading volume, the black tag there, and consistent upward price movement with large green candlestick and indicates strong buying pressure. Uh, in this case, we would like to suggest Shamnis to firstly using the strategy of buy on breakout, which the investor can buy when the price breaks resistance level with high volume, and the second is buy on dip, where the opportunity arise when price correction near support zone allow re-entry. And Shamnish also may using a trailing cut loss can help manage risk and secure profit during the uptrends. And the second is we see here the chart of Atalega shows a bullish trend with significant trading volume and large green candlestick reflecting strong buying pressure and investor confidence. Firstly, we would like to suggest to use buy on breakout strategy, where the investor should buy when the price rises above resistance level when high volume signaling continued upward potential, and buy on dips, which is to provide opportunity to enter during temporary price correction near support zones within the ongoing uptrend. These combining strategies with a cut loss will help the investor to manage their risk and allow them to ride the trend effectively. And lastly, we will see to the Supermax chart. Shows a strong bullish trend with price growth support by the high trading volume, especially after March 2020, reflected in large green candlestick there, indicate strong buying pressure. So again, we suggest to buy on breakout strategy, where the investor can capitalize on price movement breaking through key resistance levels with high trading volume, signaling further uptrend potential. And then the investor use the buy on dip strategy that offer opportunities to enter during temporary pullback near newly formed support levels while maintaining exposure to the overall trends. So basically, cut loss will help investor to manage their risk.
Next is support and resistance to determine the entry and exit point. The two key concepts in technical analysis are support and resistance, which are used to pinpoint possible point at which an asset price could reverse its direction. These ideas are often used by traders and investors to help them decide whether to enter, exit, or hold their investment. Support refers to a price level at which the demand for an asset is considered strong enough to prevent it from declining further. It is often seen as a flaw for the price, as it tends to act as a barrier that prevents the price of a security from falling below a particular level. Resistance, on the other hand, refers to a price level at which the supply of an asset is considered strong enough to prevent it from rising further. It is seen as a ceiling for the price, as it tends to act as a barrier that prevents the price from surpassing that level. In the case study, Top Glove serves as an example of a glove counter. The figures show that if a share price persistently fails to rise above a certain level, this is known as resistance level. This is perhaps because at this price, people who purchased previously but then saw the share price fall took the opportunity to sell at the price they've previously paid. As we can see in June 2020, Top Glove stock price experienced a slight decline and approached its support level. However, the market demonstrated resilience as the price rebounded and began to rise again. In this market behavior, Shamnesh should consider holding his position during period of market correction to avoid realizing unnecessary losses. To maximize return, he should surpass the resistance level, particularly if technical indicators suggest overbought condition or if there's no sign of a breakthrough above resistance. Furthermore, staying updated on company performance and industry trend can help refine the timing of the sale, ensuring that Shamnesh capture the optimal return while mitigating risk of potential price reversal.
Okay, as the conclusion of the case study, both fundamental EIC framework and technical analysis provide insight for Sumner's investment in global counter, highlighting the importance of analyze macroeconomic trends, industry performance, and company fundamental, especially during COVID-19 pandemic. And in the healthcare sector, especially glove manufacturer like Top Glove, Hartalega, and Superman, shows their performance growth due to global demand for PPE and underscoring the resilience and adaptability of the company. Strategy like buy on dip, buy on breakout, and buy on support will support and resistance level. Technical indicates will help the investor to identify when they must to entry and exit point to enhancing their trading decisions. So, followed by the Warren Buffett principle, we can suggest that Shamnis can leverage market pullback, holding first onto stock with an expectation of price will rebound by combining strategies like buy on breakout and buy on dip strategy for long-term growth in the healthcare sector. That's all from us. Thank you.